It is an annual tradition for every OEM to develop the market outlook. Typically, we do present it around Farnborough Air Show or Paris Air Show. This year, for obvious objective particular difficulties, we did not do it, and we are coming with our market outlook only now. We have made a debut and presented this for the first time only last week, global debut of a market outlook. And today I wanted to bring some highlights and also focusing on the African aspects of our market outlook. I treat this session more as a teaser to the market outlook. I have only 15 minutes, and during my dry runs, not a single time I managed to be in time, but just like with athletics, I will try to have my best performance live and try to stick to the time frame. But hereby, I wanted to make promise and undertaking that if any of our customers, partners, or airlines out there want to go deeper, have a deeper discussions, I love this topic. I'd love to discuss the trends, the numbers with you. So just please feel free to reach out to our marketing team, sales team, or myself directly, and we're happy to come visit you as soon as it's possible. If not, schedule a session virtually to go through the numbers. Okay, so let me start with the outlook itself. On the first few slides, I will share with you the bigger context. I think the overarching theme of this year's market outlook from Embraer is that we're not predicting only the numbers and when we're going to come back to the historical level, whether it's going to be 24, 25, 26. The main message is actually that we're facing the structural changes. We're heading for the new normal. And on this, I think one comment, I've seen a very interesting interview from Michael O'Leary last week, and he was very bullish, saying, you know, it's lazy to predict that the traffic will not come back. He's planning to be back to historical level actually next year or 2 years from now. We don't agree. We didn't agree. Maybe it's going to work for him to a certain degree, but globally, on average, this is not the case, and let me show you why. The crisis context. Basically, we're optimistic that we're past the turning point in terms of pandemics, but still at least a year, it will take at least a year before the vaccination is fully rolled out. So the root cause will be there for another year at least. Secondly, international trade has been affected to a degree that cannot be rebuilt from 1 week to another. The supply chains has been disrupted, the trade flows has changed, so it takes much more than a week, month, or even a quarter to turn it around. Incredible amount of debt and insolvencies accumulated across the economy. Again, something that cannot be simply resolved from 1 weekend to another. And finally, this crisis has also affected the lower middle class, something that is actually the core segment for the aviation. And before the purchasing power of this segment is being rebuilt, again, we cannot hope for a very strong demand coming back. So all of this combined leads to a very significant, the biggest crisis in 100 years in the economy. And as we see on the chart on the right-hand side, it's not only a minor blip on the map, but it puts us into something that I call parallel universe. We're gonna hit completely other route economically. And this has a direct effect also on our forecast of the traffic. This chart, many of you might know very well, but historically we've been using this chart to show how resilient is aviation industry and how quickly it actually comes back to the historical growth trends after each and every crisis. And only a few months ago, I think many analysts and many aviation experts were still trying, when trying to predict the future, were trying to draw the parallels to 9/11 crisis or global financial crisis. Well, this slide shows that any historical parallels are not valid anymore, and simply the depth of current crisis would suggest that there's not coming back to the old ways. We're heading for the new normal. So all of this combined results in our prediction that demand will never come back to the historical trend. We focused our market outlook this year for the first time on a shorter period. We're analyzing only next decade, not 20 years like usually, because the situation is unique, and you know, predicting 20 years from today would be extremely challenging task, but we tend to believe that we have very reasonable visibility into upcoming decade. We see this decade as a two sub periods. First is about restoring the traffic, restoring the volumes, and this will take 3, 4, 5 years depending on the region. But then there comes another period that we call growing slower growth. You will see that the two lines, the historical forecast and the current forecast, are actually diverging. And by the end of this decade, we believe that the industry will be on average 19% smaller than we expected it to be. So this is the context. As I said, the large part of our this year's market outlook is about analyzing the long-term trends. So what is actually driving this new normal in aviation? Well, the first thing out of 4 that we see is right sizing. This is the term that Embraer developed a long time ago, but it has never been more valid than today. We simply believe, as shown on the previous slide, that the new industry will be smaller. And it's not only us. If you see, there's many quotes from the CEOs of the biggest companies, Carsten Spohr, American CEOs, confirming the future airline and aviation industry will be smaller. On our specific segment, OEM and fleet-related part of the aviation value chain, we already see it. If you analyze what aircraft were actually flying throughout last year, it was the smaller segment, our segment, turboprops, that really outperformed the bigger aircraft. If you analyze the deliveries, cancellation rates, etc., every data points out that the relevance of a smaller fleet segment is growing. And we do believe that for the next decade, it will be one of the main trends. And we will come back to this on a couple more slides still today. Second trend is regionalization. Some call it slowbalization or deglobalization. There are some arguments that prove that this is the trend that already started pre-COVID. But right now, with interruption to the global supply chains and global trade routes, flows, we see many companies actually thinking about regionalizing their business. So this, we believe, will lead to also changes in the way that the global networks are, global airline networks are being structured, because the relevance of the domestic and regional connectivity will be significantly elevated. Third trend, new passenger behavior. Again, there has been some trends that were already visible pre-COVID, and I think now we're gonna see the step change, and they will really accelerate. They are related to technology, to introduction of what we are actually doing right now, digital way of interacting, digital way of working. But on top of this comes the growing environmental consciousness or awareness of the passenger. On top of this, we have health concerns of passengers. If you combine all of those trends, we believe that the passenger behavior and demand will be structurally altered. We believe that, for example, leisure traffic, leisure passenger, touristic passengers will be looking for a more unique destinations, will be avoiding the mega hubs, will be avoiding probably the mass tourism. All this together will lead to more capillary networks, what we call, and remapping of the aviation route maps. Fourth and final is environmental focus. We have been talking a lot whether it's something European specific or not. I think as of today, it's safe to say that this is the trend that will be successfully exported globally. With the result of the American elections, we would definitely expect a change in approach to environment there. We see China embarking also this trend. So we strongly believe that making business in the upcoming decade will require airlines and any player in aviation value chain to address the environmental challenge. So these are the mega trends that we talk about in our market outlook. Let me move to actually the forecast results. So as an OEM, our forecast is actually focused on the number of deliveries. We forecast that in the upcoming 10 years, there will be 5,500 of aircraft within our segment, up to 150 seats delivered. This is a little bit of an abstract number maybe to you, and it is a little bit difficult to compare to anything that we were predicting before because we changed the time frame of the forecast. But for you to put it in the context, the main change since last year is the growing relevance of this segment. So let me check. I've written it down for myself, the numbers. Historically, our segment we predicted will be something around 1/3 of the global deliveries. Right now, we are getting much closer to even distribution, half because of the right sizing trend. The second change is that we see that those new deliveries will, to the great extent, serve for replacement rather than growth. 75% is predicted to go for replacement, 25% for growth. This has changed from last year when back then we were predicting more aggressive growth since, again, larger portion of the fleet were about to go for growth. Where would those 5,500 go? It is mostly for restoring the connectivity, rebuilding the network. This is for right sizing the current fleet, replacing the existing regional jets, and in some cases, development of regional aviation based on the trends and the new needs that I discussed before. This is the split of deliveries globally. As you see, in every single region, we believe the right sizing is the prevailing trend. In Africa, the specific one is intra-regional connectivity. We will have in a moment a separate session from Theo talking about connectivity and why is it so crucial and important for Africa. So stay with us to learn more on this. Zooming closer on Africa, key messages. The traffic, the underlying true demand, you see significant slowdown. The average growth rate for the upcoming decade is 2.6%. To some of you, it might seem a little bit disappointing, but also let me underline, this is the result of kind of a dry and a very rigorous analytic approach from our analyst back in San Jose, based on objective data, historical trends. However, I personally strongly believe that if Africa manages to overcome some of the structural challenges and change the way it builds its connectivity, there is a chance to significantly over-deliver on top of those 2.6%. New deliveries, 100 jets up to 150 seats in our segment. Might not look overly impressive, 100, but again, to put it in the context. Relevance of the segment, 150 seats and smaller, if you combine the jets and TPs, they constitute more than 60% of the deliveries that we predict. It is the highest globally of any regions, and we sincerely believe that our jets addresses the sweet spot, the core of the needs of the Africa aviation. And finally, fleet in service. We don't predict in our forecast the deliveries of the pre-owned, but we definitely believe that the inflow of a mid-life cycle, still quite young aircraft, new generation, well, current generation regional jets, will strengthen even more and create even more opportunities for fleet rationalization or restructuring. And the actual share of our segment in terms of fleet in service will grow even stronger. And final of the key messages of our outlook is restoring profitability. I think it is obvious, but it must be said. Without restoring profitability, we cannot count on a sustainable recovery. Governments, nor any other shareholders, they cannot pour more and more equity to airlines to keep it afloat. So recovery requires restoring airlines profitability. And I think it is as simple as that without addressing the load factor gap, there's no restoring profitability. The only profitable airlines globally on average, are the ones currently in Europe and North Africa. And you see both of those regions are constantly above the average for the load factors, whereas Africa has a significant gap to bridge. And there's no bridging of this gap without addressing the fleet strategies. There are only two ways you can address the load factor gap, either by your revenue management policies, but in my personal opinion, this can have only limited effect in Africa, because in the state of maturity of African market that we see currently, the ability to stimulate the market with the price, with the revenue management policies is very limited. So this leaves you with only the second option, matching the capacity with the demand, and this requires addressing your fleet strategy. More on this also, Theo, in following session. And now I don't know how I'm with time, but let me use maybe last few minutes on trying to speak what does this outlook, the demand outlook, demand forecast, and the trends actually means for the airlines and their strategies. So here again, you see the zoom on the recovery profile for African market. We are showing the RPK development over the next decade from our perspective. I always tend to say, let's not focus on actual numbers. And for some countries, some sub-regions, the return to 2019 levels might be in late 2023. For some others, early 2025. And also, we might be wrong. I mean, we might be mistaken by one quarter or the other. But what I believe is the most important on this chart is this actually shape of those lines and what those shapes are telling me. So let me share with you the 4 observations that I have when analyzing this, this chart. So first one is the current valley dip that we see here. To me, it tells, well, there's little we can do in terms of fleet strategy to address the current situation. There's a lead time before you change your fleet, so you cannot do anything right now. But the question airline should ask itself is, am I prepared to manage any future uncertainty, unpredictability? We are drawing a smooth line going forward, but we cannot guarantee there's not going to be another shakeup in the future. So the airlines, they need to ask themselves, are they ready to flexibly address future uncertainties? We have plenty of evidence that the airlines that applied the multi-fleet strategies and they had embedded flexibility in their strategies, they went less affected through the current crisis. Second observation is this period between now and the moment we go to the historical levels. I call it the period of the new competitive dynamics. Airlines will be operating in an environment of a significant overcapacity. And each and every airline has to answer the question, will it adopt a passive or more active strategy to address it? Will they adopt offensive or a defensive strategy? Because I sincerely believe that there are players in this market globally, but also in Africa, who can turn this crisis into an advantage and come out stronger out of it. We'll finalize our webinar today with the interview with Roger Fester, and I believe this is a primary case of how you can turn this crisis into an advantage and come out of it stronger in terms of market share and your relative position if you adapt your fleet strategy to the new challenges. Third observation, and this is the one that many people is missing constantly when analyzing the crisis. The focus is so much about when will we go to the historical point. But you have to realize, even if we're now in 2024 and we are back to the 2019 levels in terms of volume, I'm trying to make everyone aware that we'll be at least 4 or 5 years behind where we were expected to be. So in practical terms, it means that whatever choice in terms of fleet or strategy airline made pre-COVID, it's not valid anymore. Or at least it deserves a thorough revision. So I think the airlines that now take a step back, talk to the OEMs, talk to their stakeholders and think, okay, what is the right way going forward, instead of simply continuing with the orders and the decisions that they made before, will come out much better. And my final observation, if you compare the line that is showing the historical forecast, 2019, and our new forecast to 2020, you will see that those lines are diverging. We believe that there's no coming back to the super cycle, what we called it last 2 decades. The growth rates, for the reasons that I already mentioned, structural changes to the demand, to the passenger behavior, pressure on environment, they will suppress demand constantly. So the question the airline has to ask itself is, am I using the right assumptions when I'm planning my fleet, my network? It also has to ask themselves, how do I stimulate this market and the volumes in the most efficient way? And again, let me make the reference to TO sections. We strongly believe that the price stimulation at this stage of maturity in Africa doesn't work. We believe the only way to stimulate the volume is through offering robust networks with high level of connectivity. So this concludes very briefly my observations. I think every single point that I mentioned deserves at least 5 or 10 minutes deep dive. I encourage you to reach out to us, and we're happy to have those deep dives discussions with you. I encourage you to visit our page, www.Embraer Outlook 2020, and you can also go through entire documents. And now over to